Welcome to this week's Coffee Chat. It's Ernie Burns and Chris Burns, Burns Estate Planning Wealth Advisors. What we're going to talk about today is tax strategies and taxes that are coming due. Hey, it's the end of the year, so I know a lot of times this is not on people's minds, but this is actually when you start getting prepared, so it's not a big surprise. You want to make sure that money is set aside because the Christmas holidays are here and they're coming, and you want to make sure that you have enough for taxes for next year. And also you want to make sure you contribute to the accounts that you have, so you're funding those accounts for this year.
So Ernie, when you mention retirement accounts, the big thing that people always think of first is my 401k. And that's something that comes out most of the time prior to them receiving their paycheck. Most people do that way. But there's other retirement accounts, and there's also limits inside those accounts. So for like an IRA this year for 2021, what can people contribute to that? And why would it be beneficial if they haven't done it yet year to date?
So let's say your income, let's say you've done well this year. You've gotten some bonuses, you've hustled, maybe you take on a couple extra jobs. Anything you put into a retirement account is tax deferred. It comes off your gross income. So we'll lower your tax bracket or keep that bracket low enough for you to be able to afford to do a few extra things. So you want to make sure it's deferred. If you're 50 and under, you can put up to $6,000 a year to come off your gross income into that IRA and establish that IRA or contribute to a current IRA that you have. If you're 50 and over, you could contribute an additional $1,000, which is $7,000 a year. And if your 401k, as Chris just mentioned, if you're under 50, you could contribute up to $19,500. If you're over 50, up to $26,000. That's a big benefit, and that's a huge benefit to come off your gross income for the year.
So Ernie, question with that is, so people look at their IRAs, which is pre-tax dollars, and people go, well, hey, I want to put some money in a Roth, which is after-tax dollars. We've got some great software here at the firm that can help them make that decision, but as say they're under 50 and they're getting close to a tax bracket, right? Where would you normally want to see someone start with when they go to look at their retirement savings for the year?
Well, you need to look at your overall, can you contribute to a Roth first of all? If you're over $198,000, then you cannot contribute to a Roth, and then it's deviated each year. So you're limited on what you can do. However, anything you could put a Roth IRA is a benefit, because what are taxes going to do in the future?
They're going to go up.
They're going to go up.
So let's talk about clients who are maybe within 10 years of retiring, right? So they've built up good savings inside their 401ks and their IRAs. Is there anything they can do to help get them prepared moving into retirement to help maybe lower some of the tax complications up to that point?
Well, the big thing is, one thing is, like we said, contribute to a tax-free account. See if your current company has a Roth 401k option, okay? You might have that 401k, but there's also a 401k Roth option. That could be very, very beneficial too. Now, it doesn't come off your gross income for the year, so it's still added into it, but that's tax-free growth in the future, okay? And there's other things that you can do. Now, one thing I want to mention here, if you're self-employed, or you make too much money to contribute to a Roth, okay, in that manner, or if you're a doctor, lawyer, whatever type of profession you might be in, you can give us a call, and we can sit down and build a financial plan for you and give you some tax strategies that you can implement that are tax-free strategies for you, but that requires a meeting. But I hope this helps everybody start getting lined up to make sure that, and reminding you to contribute to that IRA or that retirement account for that money to come off your gross income. And if your income is very high, that there's a firm here that we focus on tax strategies.
Well, we spoke about individuals under 50. We spoke about individuals who maybe have 10 years to retirement. Let's also talk about the retirees, right? So one of the cool things about being retired, and you've said it all the time, is January 1, you get to control how much you pay in taxes that year. So they have a little bit more flexibility about this time of year of where assets need to go and what are some tax strategies they can use there. Any suggestions there?
Yes. One is, we know taxes are going to go up, like Chris just said. So, and he said January 1 is where you draw your money from each year determines what taxes that you pay, because it's not regular income taxes in a sense. So let's back up. Retirees. So retirees, we have 5 years before the Trump tax cuts expire. And we know Congress is voting today, and also the Senate has to approve this bill, and we'll see what future tax rates are going to be, but we know they're going to go up. So anything we can defer now over the next 5 years, you're paying on the seed, not the harvest.
Exactly.
So therefore, that's another reason that you want to sit down with in a financial advisory firm that focuses on tax strategies.
Yeah, because that can help once they actually hit that age of 72 for required minimum distributions. Maybe they don't need to take it, so let's lower that amount as much as possible up until that point. Maybe save them some future tax dollars.
That's real big. And
the big thing with that is let's sit down, let's have a more detailed conversation.
Yeah.
With that being said, Ernie, coffee and chat, tax strategies. Anything else before we close up?
No, I think that's it. You guys have a great weekend. Give us a call. Look us up on the web. If you have any questions, we can definitely help you out. And if you have a tax issue that you're concerned about for the future, especially what's happening in Washington and where they're trying to increase the tax rate, our investment firm actually focuses on tax strategies. So we'd love to sit down and talk to you.
Ernie, thanks. Thanks again. Guys, have a great day.
Take care now.
That was great.
The red or green button?
The orange.
Orange.
Stop.